Most property investors think that if their rental income is more than their bond payment, they are cash flow positive. Wrong. I did too, until I found a formula that changed everything. If you've ever looked at your rent minus your bond and thought, that's my profit, don't feel bad. I did the same thing until I saw the real numbers and it shocked me. Today, I'm breaking down the method I've used on every deal to calculate my property's cash flow using the net operating income (NOI) formula. And don't worry, if this is your first deal, I'll walk you through it step by step. And by the end, you'll feel like a pro. And stay with me till the end because I'm going to show you my C.A.S.H flow formula. The same 4-step system I use to check if a deal is actually worth it. And once you see it, you'll never look at cash flow the same way again. Whether you are here in South Africa or investing anywhere in the world, this applies. And I've got a challenge for you. I'll show you 3 real properties in this video. And your job is to guess which one actually makes the most cash flow. Sound easy, right? You might be surprised. I'll reveal the answer right at the end, so lock in your guess and see if you were right. Grab a pen and let's run the numbers smart investors swear by. Let's go. By the way, I'm Ekow, a legacy builder, a property investor, and a former investment banker. And on this channel, I break down smart property strategies to help you invest like a pro and build lasting wealth. Starting with section 1. What is cash flow and how does NOI fit in? Cash flow is what is left over after your property earns money and pays its bills. It's what you keep. And that starts with understanding NOI, net operating income. Think of it as your property's financial engine. Here in South Africa, levies, vacancies, and hidden repairs can destroy your returns if you don't factor them in. And if you want a deeper dive on NOI, I've done a full breakdown on another video. It's linked right here and in the description below. Watch it after this video. Bond doesn't count here. Next up, we are diving into how to calculate cash flow using real numbers, what to include and what to leave out, the hidden costs killing your profit in South Africa or anywhere in the world, the biggest mistake investors make and how to avoid them, so you can calculate cash flow like a pro. If you want to dive deeper into cash flow and NOI analysis and how it fits into your investment strategies, book a free consultation at propertyaskow.com. Let's break it down together. Next up, Section 2, NOI formula breakdown. Let's break it down. First, your revenue. That's your rental income. Next, subtract your vacancy loss. Even if your unit is empty just for 1 month in a year, it hurts. Now, subtract all operating expenses. Management fees, rates, insurance, maintenance, they add up fast. Don't include mortgage payments, tax deduction, or depreciation. Those come later. Now, let's level this up. Think of it as your cash flow cheat code. What smart investors use to unlock real return, not hype. If you are not playing at level 3, you are not playing to win. But here's the part no one tells you. This one key number and you could be bleeding thousands every single month without you knowing it. Yeah, now imagine doing that for a whole year. That actually happened to me. Years ago, I bought a rental that looked amazing on paper. The rent was 9,000 rand and the bond was just under 6,000. So I thought, cool, I've got 3,000 cash flow. But I didn't account for levies, vacancies, or repairs after the geyser burst. By month 4, I was putting money into this property, not getting anything out. I wasn't investing. I was leaking. That was the moment I realized I wasn't running a business. I was gambling with hope. Most property investors take rent, subtract bond, and call it profit. That's not cash flow. That's a trap. Let me show you what happens when you get it wrong. Just one mistake. Now, don't keep it to yourself. If you know someone thinking of buying property, send this to them. It could save them thousands. Alright, section 3, real life examples with a South African twist. Let's run 3 real examples so you see this in action. Say a rental property brings in 8,000 rand per month rent. Expenses 2,500 rand at 5% vacancy loss is 400 rand. Its NOI is 5,100. Cash flow equal NOI minus bond, say 4,800. That's 300 per month profit, not 3,200 like you thought. For flipping property, say you bought at 700,000 rand, renovation 150,000, and sold it for 1 million rand. Holding cost, say 30,000 rand. Your profit is 120,000 rand. But spread it over 6 months, then you're getting 20,000 per month. Looks huge, but time costs money. The flip took 6 months. That's 20,000 rand per month, not one big payday. Now let's look at a student accommodation I saw in Pretoria. Rent 4,500 per room. It had 3 rooms, which makes it 13,500. Operating cost 4,000 rand. Your NOI is 9,500. Looks amazing until December hits and your whole place stay empty. Always factor in academic calendars. Commercial property with 3 tenants in a Rosebank office. Each pays 10,000 rand per month, 30,000 rand in total. Operating cost 12,000 rand. Vacancy, 1 empty unit equal 10k loss. The NOI is 8,000 rand. You are still positive, but if 2 leave, that's a 20k hit. High return, high risk. Now, let's look at this Airbnb in Durban's beachfront. During high season, it brings in 1,000 rand per night. 20 nights equal 20k. And during low season, 6 nights equals 6k. Average that out, big numbers, but your month-to-month cash flow can swing widely. Want to make sure you never miss a cost again? I've put together a free property inspection checklist. You can download it right now. It's the exact one I use before I run any deal. Now, let's talk about section 4, the mistake that cost investors serious money. Number 1, including your bond payment in NOI. Nope, that's after. Number 2, ignoring vacancy. It happens, plan for it. Number 3, ignoring repairs. Don't do that. And 4, underplaying seasonal rental. Just because rent is good in December doesn't mean it will hold in March. Alright, time to reveal the winner. If you guessed the rental property made the most cash flow, you were right. But barely. The flip looked bigger, but took more time and risk. If you found this useful, I've got a full playlist breaking down the 7 formula every property investor must know. And yes, this one is one of them. So here's the truth. Cash flow isn't just your rent minus your bond. It's the full picture of what you actually keep after every cost is paid. And net operating income, that's the core of it. This formula didn't just save me, it turned my entire strategy around. I went from crossing fingers to calculating returns with confidence. And now it's yours. Run it on your last deal and drop your real cash flow in the comments. I read every single one. You never know. Your deal could be the next case study I break down. And while you're there, let me know which deal type you want me to break down next. Rental, flip, or commercial? Should I break down Airbnb, student housing, or even mixed-use properties next? Drop your votes in the comments and I might make it my next case study. And before you go, here is my signature system to check your numbers before you commit. I call it the C.A.S.H formula. And if your deal doesn't pass it, don't do it. Let me break it down for you what C.A.S.H stands for. C, count everything. Track every rent in and rent out, no guessing. Rent, vacancies, levies, management, insurance, repairs. A, adjust for reality. Don't use perfect month math. Plan for tenant turnover, seasonal dips, and maintenance surprises. S, subtract smartly. Use NOI, not just rent minus bond. NOI equal revenue minus operating expenses. Cash flow equal NOI minus bond. Exclude depreciation, tax write-offs, and emotions. And H, hit your cash flow percentage target. Always calculate your cash flow in percentage. Cash flow percent equal annual cash flow over initial equity. Helps you compare deals, not just feel good. Save it, screenshot it, and share it. This is how legacy investors think. Got a deal you're thinking about but not sure if it passes the C.A.S.H test? Book a free 15-minute call with me. Let's run the numbers together. If you've got a friend investing or thinking about buying property, share this with them now. It might save them thousands. Even if you are not buying your first rental yet, saving this could save you thousands when the time comes. In my next video, I'll show you how to compare properties side by side so you always pick the most profitable one. Be a legacy builder. Peace.